So in this video, we are going to see question number 4A. So AON Limited has furnished the following data for the financial year 24-25. So sales 10 lakhs, contribution to sales ratio 37 percentage, margin of safety 25 percentage. So yeah, contribution to sales ratio, that is 37 percentage. So what it means, so if I so here they have given contribution to sales 37 percentage. That means it is based on sales only, right? My sales will be 100 percentage. So my contribution is 37 percentage. So what will be my variable cost? 100 minus 37. So 67 percentage will be my variable cost. So margin of safety 25 percentage. Again, margin of safety is the percentage determined based on sales only. So margin of safety is 25 percentage, means my sales. So what is my formula for margin of safety? So margin of safety is equal to actual sales minus break even sales, right? So if my margin of safety is 25 percentage, then my actual sales will be 100. So my break even sales, that is 100 minus 25. So 75 will be my break even sales. So now what else they have given in the question? Let's see. A decrease in selling price and decrease in fixed cost could change the contribution to sales ratio to 30 percentage. So there is going to be a decrease in selling price and fixed cost. So my contribution to sales ratio is to be at 30 percentage and margin of safety is at 40 percentage based on revised sales. Now I need to calculate what is the revised fixed cost, what is the sales and revised sales, and what is the new break-even point, that is revised break-even point. So I will be calculating only information I am having is sales, that is 10 lakhs. So I will be calculating what all the informations I can able to calculate based on sales. So my sales is 10 lakhs, right? This is existing sales. So then my variable cost, how much I have calculated here, that is 67 percentage. So 10 lakhs into 67 percentage. So I will be getting 6 lakh 70,000. So my contribution will be, sorry, here variable cost is 63 percentage. So if I am reducing 37, I will be getting 63 percentage. So 6 lakh 30,000 will come. So my contribution will be 3 lakh 70,000. Now I need to calculate uh, fixed cost, right? So I can, is it possible to calculate fixed cost? Yes, obviously, because 75 percentage is my break-even sales. So my break-even sales is 75 percentage on sales. That is 10 lakhs into 75 percentage. So my break-even sales will be 7 lakh 50,000. So what is the formula for break-even sales? Fixed cost divided by PV ratio. So my break-even sales is 7 lakh 50,000. My fixed cost, I don't know. My PV is 37 percentage at this level. So fixed cost is equal to 7 lakh 50,000 into 37 percentage. So I will be getting 2 lakh 77,500. So this will be my fixed cost. So everything I have calculated based on existing level. So now let's move on to new level. So my revised contribution to sales is 30 percentage. That means my sales will be 100 percentage. I don't know the amount, the revised amount. So my variable cost and contribution. The contribution is 30 percentage. So my variable cost is 70 percentage. So this is revised, right? So here there is a change in sales. That's why there is a change in contribution. But here there is no change in variable cost because there is no change in units also. So my total variable cost, the 6,30,000 will remain same at this capacity also. So here there is no change in capacity, there is no change in variable cost amount. So here 6,30,000 remains same, right? So the 6,30,000 is for 70 percentage. Now I can easily calculate what will be for 100 percentage. That is just a cross multiplication, 6,30,000 into 100 by 70. So I will be getting 9 lakhs. So this is my revised sales, right? So my revised sales made very easy. So my existing variable cost is 6,30,000. Now that revised percentage is 70%. So I'm just calculating based on that. So I'm getting 9 lakh. Now let's try to calculate fixed cost. Here there is a change in fixed cost also. That's why there is a change in margin of safety, everything. So now revised margin of safety is 40%, right? So my break-even sales minus fixed cost. Sorry, my margin of safety is my actual sales minus break-even sales. So my actual sales at this level is 100 percentage. So my break-even will be 60 percentage. Then why only I will be getting 40 percentage of margin of safety, right? So this is my break-even sales percentage. So now I need to apply the formula again, the same formula I used here. I'm going to apply it. Now I'm going to calculate break-even sales. So break-even sales is 60 percentage on sales. That is 9 lakh into 60 percentage. So 5,40,000 will be my break-even sales. So now I'm applying the break-even sales formula. That is fixed cost divided by PV ratio. PV ratio here is 30 percentage, right? So 5,40,000 is equal to fixed cost divided by 30 percentage. So my fixed cost is equal to 540 into 30 percentage. So 1,62,000 will be my break even fixed cost. 1,62,000. So hope this is clear. I have revised sales that is 6,30,000. So based on margin of safety percentage, I have arrived what is my break-even sales percentage. So on sales, 60 percentage will be my break-even sales. So 9 lakhs is my revised sales. On that 60 percentage is my break-even sales that is 5,40,000. Now I am applying break-even sales formula that is fixed cost divided by PV. So 5,40,000 into 30 percentage, it amounts to 1,62,000. So now I found out my new break-even point that is 5,40,000. Revised fixed cost, revised sales, everything I have found out. So just I need to apply what are the formulas I'm available based on the information given. So if I am trying to apply, then I will be getting this. So now let's move on to 4B. Pico Limited, having an installed capacity of 1 lakh units of product, is currently operating at 70% utilization. At current levels of input prices, the unit cost after taking credit for applicable export incentive work out as follows. So if I'm operating at 70% capacity, I will be in 97. my unit cost will be 97. If I am operating at 80%, my unit cost will be 92. If I am operating at 90%, my unit cost will be 87. If it is 100%, unit cost will be 82. The company has received 3 foreign orders. So now we receive 3 foreign orders that is from different sources. Source A 5,000 units are 55 per unit. Source B 10,000 units are 52 per unit. Source C 10,000 units are 51 per unit. Advise the company as to whether any or all the export orders should be accepted or not. So we need to advise whether these 3 orders or any of these orders can be accepted or not. So now this is relating to differential costing, because we have so many percentage. Now, as of now, the company is operating at 70 percentage capacity. So here I have differential cost only, right? So if I'm operating at 80 percentage, that is for 10 percentage differential capacity, my cost is going to be reduced 5 rupees per unit. So now I'm going to find out differential cost, because if my company is operating at another level of capacity, my cost will change, right? So first I want to calculate my differential cost. So statement showing differential cost. So this is capacity, that is 70, 80, 90 and 100. So my production at 70 percentage capacity will be 1 lakh units is total, right? So at 70 percentage, 1 lakh into 70 percentage, 70,000. Here it will be 80,000, 90,000. This is 100. That is 1 lakh. So at 100 percentage capacity is 1 lakh. So in how I am saying it is 100 percentage, they have given installed capacity. Installed capacity means always it is 100% only. So installed capacity refers to 100 percentage. You should note all these points while answering this question. Actually, this is a very simple question if you know the concept. So my installed capacity is 100%. That means 1 lakh units. So my company is operating at 70% now. So 1 lakh into 70%, that means at 70% capacity, 70,000 units. So 80%, 80,000. Okay, fine. Then I have unit cost. So what will be my unit cost? 97. So unit cost, that means per unit cost is 97, 92, 87 and 82. So 5 rupees is getting decreased for each increase in level of activity. So my total cost at this level will be 70,000 into 97. Here 80,000 into 92. Same way 90,000 into 87 and 1 lakh into 82. So I just calculating differential cost. So differential cost, here it will be no differential cost, obviously. So at this level, 73 minus 67, 90,000. So here 5 lakh 70,000 and here it is 4 lakh 70. Here it is 3 lakh 70,000. So now I'm going to calculate per unit, differential cost per unit. So that means what is the differential units in each stage? It is 10,000. So 5,70,000 divided by 10,000. It is 5 rupees by 57 rupees. Here it is 47 and here it is 37 rupees. So differential cost per unit is 57, 47, 37. So I will tell you why this step is required going forward. So now I want to calculate whether the export order should be accepted or not. So we have export order from different sources. So we have source A, source B, source C. So source A, source B, and source C, right? So export order in units. 5,000, 10,000, and 10,000. So that is total comes to 25,000 units. Now, just tell me if I'm accepting 5,000 units, then my company will be at operating at 75,000. Existing is 70,000. So my new capacity will be existing 70 plus 5. Okay. So 75,000 units. That means 75 divided by 1 lakh units. So 75 percentage. I'm going to operate at 75 percentage. So at this stage, my differential cost for producing one unit is 57 rupees. So here, my differential cost for producing is 57 rupees. So differential cost is 57 rupees per unit. That means my total cost for 5,000 units will be 5,000 into 57. See, now my company moved from 70% to 75 percentage capacity. So that means I will be operating at 92 rupees now. My unit cost will be 92. So my differential cost will be 57 rupees per unit. That's why this calculation is required. So my total cost is around 2,85,000. Now, what is my offer price? So my offer price is 55 rupees per unit. So 2,85,000 into 55. So my offer, sorry, 2,55,000 into 5,000 units. So this is my offer price, 2,75,000. So here I'm incurring a loss. So how much is my loss? 275 minus 285. This is my loss of 10,000. Okay. Let's move on to source B. Now, already, say for example, if I have accepted this source A, so I'm operating at 75,000 capacity. So now I'm going to produce this 10,000 also. That means my company is now under 85 percentage capacity, right? So that means my differential cost will be for 85 percentage capacity 47 rupees. So here we have two breakups. One is for 5,000 units and that is up to 80%. So one is for 5,000 and another one is for next 5,000. So here what I will do, here I have to bifurcate 5,000 units at the rate of 57 rupees and another 5,000 units at the rate of 47. So hope I am clear here. See, now I am moving to 85% capacity. That means from 75 to 85%. But my cost will differ only after 80% capacity. That is from 75 to 80%. That is 5,000 units, right? 5% capacity into 57 rupees. There I will be incurring only 57 rupees. After 80% capacity, my differential cost will be 47 rupees. So 5,000 into 47. So my total cost will be 5,000 into 57 plus 5,000 into 47. So 5,20,000. Okay. What is my offer price here? 52 rupees per unit. That means 10,000 units I will be getting 52 rupees. That is 5,20,000. Here in this case, I won't incur any profit or loss. So my profit or loss will be 0. Now, if I am accepting another offer of 10,000 units, that means now I am in 95,000 slab, right? So again here, my differential cost will getting generated. So for 5,000 units, I will be operating at 47 rupees. And for rest of the 5,000, I am operating at 37 rupees per unit. Okay. So my cost will be 5,000 to 47 plus 5,000 to 37. So my cost will be 4,20,000. Here my offer price is 51 rupees. So 10,000 into 51, 10,000. So my profit will be 90,000 at this stage because I'm getting a huge profit because my total cost per unit itself is reduced here drastically. That's why I'm getting a huge cost of 90,000. So I will be able to generate an overall income of 80,000 rupees. Now, I want to write my decision, right? Whether I can accept A, B, or C. I have to accept all these three orders in order to get 80,000 profit. If I'm not accepting the source A, now what will happen? My company will be operating at 70% only, right? So I want to incur a cost of 92. Then again, it will be a loss here. So my differential cost will be 57. So, but my offer price is 51. So I can't accept a single order because my capacity will be getting affected. Since my capacity is increased, my differential cost is also varying. So hope I am clear here. See, இப்போ நான் வந்துட்டு இந்த கெப்பாசிட்டி இந்த 5,000 கெப்பாசிட்டி அக்செப்ட் பண்ணலன்னா என்னோட கம்பெனி எங்க இருக்கும் 70% கெப்பாசிட்டி தான் இருக்கும். ஸோ நெக்ஸ்ட் ஆர்டருக்கு மை டிஃபரன்ஷியல் காஸ்ட் வந்து இந்த 57 ருபீஸாக தான் இருக்கும். அப்போ நான் இந்த சி நான் அக்செப்ட் பண்றேன்னு வச்சுக்கோங்க. மை ஆஃபர் ப்ரைஸ் வில் பி 51, ரைட்? ஸோ அப்போ அங்கே என்ன ஆகும்? 51 மைனஸ் 57 6 rupees per யூனிட் உங்களுக்கு லாஸாக தான் இருக்கும். ஸோ அப்போ நான் சியும் அக்செப்ட் பண்ண முடியாது. ஸோ யூ கேன் சே நான் இந்த ஃபிகர்ஸ் பை சீயிங் திஸ் ஃபிகர்ஸ் நம்ம என்ன நினைப்போம்? சி கேன் பி அக்செப்டட் பட் த க்ரைட்டீரியா இஸ் இது டிஃப்ரென்ஷியல் காஸ்ட் இருக்கு. ஸோ ஒரு சோர்ஸை நீங்க அக்செப்ட் பண்ணலன்னா இந்த டிஃப்ரென்ஷியல் காஸ்டும் சேஞ்ச் ஆயிருக்கும். So we need to accept all the three orders together to get a profit of 80,000. So all three orders can be accepted to get a profit of 80,000. So remember, we need to accept all the three orders.